Hi, I am Professor Tian. I am a macroeconomist. One of my favorite topics to talk to students about is monetary policy. But one cannot discuss monetary policy without first discussing monetary policy makers.
In this video, we are going to discuss the Central Bank of the United States, the Federal Reserve System. We'll discuss how the Federal Reserve was originally conceived, its unique structure, and its main functions. If you pay close attention to the news, you will hear constant discussions of the Fed raising or lowering interest rates, or the Fed's actions impacting inflation rate in the country. When the media talks about the Fed, they are not referring to the federal government or any number of federal agencies that have the word federal in their titles. When you say the Fed to anyone in the US or abroad who are familiar with financial markets, they will immediately know you are referring to the Central Bank of the United States, the Federal Reserve System. The Fed was created on December 23, 1913, when the Federal Reserve Act was signed into law by President Woodrow Wilson. You may wonder why the US did not have a central bank until well into the 20th century. The rather delayed establishment of a central bank in the US was partly due to American skepticism with any centralized power. It took quite a bit of political maneuvering to get the Federal Reserve Act signed into law. The unique structure of the Fed was designed to prevent too much concentration of power into one single entity. The Federal Reserve is referred to as a system because it contains not just a central governing board, but also a decentralized operating structure with 12 reserve banks scattered around the country and a policymaking committee, the Federal Open Market Committee. The Board of Governors consists of 7 board members who are nominated by the U.S. President but need to be confirmed by the Senate. Each board member can be appointed for one 14-year term, and terms are staggered with one term beginning every 2 years. The chair and vice chair of the board are also nominated by the president and confirmed by the Senate. Their terms are 4 years only, but are renewable. The Board of Governors oversees the operation of the 12 reserve banks. The reserve banks and their district branches can be thought of as the operating arms of the Fed. They act as the commercial bank's bank with their respective districts and provide banking and supervisory services to the Reserve Bank's member banks, kind of like how our banks provide services to us. Banks can make deposits at, borrow from, or even lend to the Federal Reserve Bank in their district. Finally, the FOMC is the body within the Fed that actually makes monetary policy decisions. It consists of 12 voting members, which includes the 7 board members, the president of the New York Fed, and 4 out of the 11 remaining Reserve Bank presidents, who rotate through the FOMC annually. Together, the different entities of the Federal Reserve System work to conduct monetary policy for the United States in order to achieve maximum employment and stable prices in the country. The Fed also works to foster a safe and efficient payment and settlement system, and it supervises the U.S. financial institutions and promotes the stability of the financial markets. So what makes the Fed different from other government agencies in the U.S. or other central banks around the world? It surprises many people that the Fed is a semi-private entity. The 12 reserve banks are incorporated separately from the Board of Governors and function kind of like private companies with their own board members and shareholders who are the commercial banks within each reserve bank's district. So the reserve banks are not owned by the government. Even though important posts within the Board of Governors are appointed by the President of the United States and confirmed by the Senate, the long 14-year term of board members and the staggering nature of term expirations means that it would be difficult for the party in power to stack the Federal Reserve Board with their own nominees. The private ownership of the reserve banks and the unique structure of the Board of Governors help to ensure that monetary policy making can be done in an independent manner, free from political influence. In addition, the Fed is not funded by congressional appropriations. It finances itself using interest earned on the securities it owns for the purpose of conducting monetary policy. Every year, the Fed earns tens of billions of dollars in profit. It does not get to keep it all, though. The majority of its net earnings are turned over to the United States Treasury. The independence the Fed has over its budget also insulates it from the influence of politicians that hold the purse strings of other government agencies. The Fed is one of the most important central banks around the world. Given the size of the U.S. economy and the importance of the U.S. dollar, the Fed's policy moves are carefully monitored by Fed watchers in every corner of the world.
I hope you find the Federal Reserve System as fascinating as I do, and that you have learned something interesting and new in this short video.